see that at that stage, it covers that interest rate is declining at the rate contraction is declining, and the inflation is high, extremely high, and national output report is on a serious decline, and cost of goods and services remain high. And we are out of that stage now in our economy. We are now already entering the early expansion. It's a good sign for us, which is good for the market. And also, the result that have come so far are to confirm that we are already entering the early expansion stage of the economy, because all the unaudited accounts, both year and the quarterly that came in the month of January and February, revealed that companies' numbers have improved despite the corona effect for that year. And also, the auditors that are coming so far now that are audited, when the have been declared, it's not telling that companies are really doing well. Some companies not for the year 2020, because look at some numbers from financial sector, the ones that came from even the consumer goods sector, the ones that came from Dangote Sugar, and the national salt are giving insight what has happened in that sector. Who tell you that if the trend remains like this, every second quarter we'll see the market, bouncing back. And also people are asking why is it that the market is going down, why our crude oil price is going up in the international market. The advantage I would say is not that the uptrend in the crude oil price is not reflecting in our own reserve here. For year to date, our reserve has been on a decline. Why the oil price is going up? For that, it's not attract any serious investor to look at. They want to see as crude oil price is going up, let it reflect on the nationwide reserve. If that is achieved, very soon there will be reversal effect. Not only that, the numbers we are seeing already have given us inside that even after this little correction we are seeing in the market, because we say market is bearish when market have lost 20%. As to speak, market have not lost 20%. I mean, market is still at a price correction or pullback. That's what that's what we're saying in the market, that is not a pullback or price correction, which is likely also to rebound any moment from now. But when market have lost up to like 20%, I think this is a bearish market or it's a bear cycle. As to speak, market is just on a correction move for me, and for that there's no cause for alarm. And this I've just shown you the 5 phases of the economic cycle. I mentioned what early expansion, mid expansion, and late expansion, late early contraction, and late contraction. Now that we have seen these economic stages, where we are, as I said, that we are entering the early expansion. Early expansion. Even what's it called, interest rates remain low. We are seeing that inflation is affecting economy, but output is also coming out. I think that until we compound through from 15 quarter around the years we have entered towards the mid expansion, but now we are already at the early expansion, which we are waiting that government will maintain the policy and also address the issue of insecurity and all these mismatched policies to put the economy in the right track. At the end of the day, going to reflect in the market, because all these companies are operating in different sectors of the economy, and government has gone out kind of done intervention in those critical sectors, and that's also rubbing on some companies that are put in those sectors or industry. For me, there's no cause for alarm. Then now go to the market itself. I said market has 2 circles. We have the bearish circle and the bear circle. The bearish circle at where price of stocks are down. And factors that will drive that kind of situation, I will mention them. When there's no liquidity in the market and the companies that are pushing for results, and at the same time, the economy is down. That is where you experience a real bearish market, and that is another set for the market side. Then the good side is where you have liquidity and you have the corporate tenants are looking up, and there's no positive sentiment. These are the factors that will drive all the bullish cycle. So in this bullish cycle or bearish cycle, we have 4 different phases in this market situation. Then you as an investor will not take these phases to take position. Yes, we have called the accumulation stage or accumulation phase. And that's whether you use stage or phase or trend. Then in that accumulation stage is where you see the price of goods of equities are low, and you see they are bouncing within their strong support level, not going below it. It says that is what is the support level. I call it accumulation stage. Then we will not go on the markup phase. The markup phase is where funds start entering the market, usually when the smart money start coming in and say this stock are attractive. You put the market towards the markup stage. And that market stage is where every investor that entered at a product will be smiling. You and I that have understand the market know that, at this stage, market price is down here, it's not going below. The market down here is not going below there. You not have to know that stage. That is what accumulation stage. After that, the markup stage is where price of equity start going up. not because of what the demand. And numbers have said of the companies that are listed are unattractive, like that these stocks are undervalued in that position. You now see price on that exercise, of course. One is very important in the equity market. It's one of the major fundamentals for equity market. When there's liquidity in the market, price will move up. But when there's no liquidity, price will drag I think that can start declining. But when there's liquidity trading stocks, price will go up. And that state of markup, you see, enter the market, prices will go up. And then after that, you have what called distribution stage. And at the stage, you see that investors are really taking the total profit. It's not moving up again at the way they move at the markup. They see the stock trying to resist further rally. It's becoming what we call a resistance level at that stage. At that stage, you as an investor should have in mind that market is not going beyond here. Let me not act fast. How do you act fast? To take decision. Don't be greedy. That's why right from the concept as an investor or trader, your investment objective, your exit strategy, and exit strategy should be at the back of your mind anytime. Don't be greedy. Don't follow the market bandwagon. Note that your goal is guiding you. Why many investors in our market today have issue that they only know when to buy, they don't know when to sell. And because there is no proper investment goal set from the concept. If you set your goal that if I make 25%, if I make 15% of this stock, I'm going up. That will guide you to be booked in any stock. But when you are putting back, oh, price is going up, and then it's going up. I thought 10 naira, I do to 15 naira. Before you know that stock has gone to 10 naira, will come back at 2 or 5 naira because there is no good guiding you. That's why those investors that are buying testing now will tell them that you will be guided by what? Your buying rate, your set target, and your profit. Don't wait until you give 100%. That's why you have to have what? Target. That target is very, very important. Very, very important. Let your target guide you. That is what the markup is. Then another stage that is at what we call resistance level. At that level, you don't need to panic because you have entered accumulation stage that you have taken the markup. Then what you do, you will just sell it. Then no market in the world will have a straight line graph. It's not done. Even line graph is said it's not up straight. That means market have rallied at that market is definitely correct. And that is at the stage of distribution, that market is higher. Have it in mind. Then I will say that market at different stage, that market is at that level. Then after that level, the market will enter what a decline stage. That decline stage is not correction. That's when you see what a bear cycle. Market will come down, losing about 20 and above 20% within a period of within 3 months or 2 months because it's what a bearish market. And that's the smart investors that have sold off at the distribution stage, at the market stage, will be smiling. Then that's another level of accumulation where they will enter the boat. If you don't understand the market, some will buy even when the market is already at the decline stage. It will take you down. But those that understand the market is in 4 phases: accumulation, markup, distribution, and decline. You know that at markup, you are already in money. Then control stage start selling. Then when you have sold at that control stage, you come down at the decline stage, come down and accumulate again because there's always a circle. Just like the economy has a circle, the market also has a circle. But the two circles, the two situation of the market is bearish and bullish. And you know that when market is bullish, that market also gain more than 20%. It's just like what we saw in 2020, market gaining 50%. It said that market was a bullish market. You don't know to say because that gained more than 20%. It says that market is bullish. Then now we are seeing a correction, as I said, you don't need to panic because we are already at the middle of what? At the middle of any season. Don't be any finance in February as late as it was, and I think that's what we're expecting. The ones that even came yesterday, even that the market did not react to those numbers, that's giving us the fact that even when the market after this non state, they enter the current state if possible, because factors that can take the market is still there. If tomorrow CBN reduce their JGB from 5.5 to 4, you see that the market also will change to move because every investor are looking at what was follow balancing. They want to move to where there's no risk. Clearly, those that don't want to take risk. For people like us, we are risk takers. We play the equity market more than what the money market. Because I can't put my money down for a whole year for 364 days, expecting 5.5%. Why equity trading a day? You can make stock and give you 10%. If you are serious and you pick your stock right, then why would I go and tie down my money for a whole year for 5.5? That's why we have different category of investors in the market. I believe if there's any change in this JGB rate, it's possible to buy the market positive. For that, investors don't need to panic at this point at all. You don't need that. All you don't do, just make sure that your strategies are intact. And those strategies that I've mentioned, I want to review now how you can also know exactly those stages you should be, and how to identify that this stage is a markup stage, distribution stage, and think that this was what we call this stage is a markup stage, distribution stage. I want to tell you factor that we look at distribution stage, at markup stage, and accumulation stage. Once you have it at the back of your mind, it will help you to take decision, and that is what will guide you as an investor. And that is the aim or the purpose of this training today, so you understand that different stage of the market and you play with it efficiently, and you make money from it. You want to know how to identify these different phases. As I've said, the accumulation stage involves buying securities that have declined in price. So that have declined in price, those stocks that have suffered losses, but their fundamentals are what intact. Not because people are taking profit and it's so down, it doesn't mean that the company is bad. You should know that this company has fundamental, but market activity. That means at the acquisition stage, you look in the world of that stock. Make sure that that stage you have really such stock. You have made that stock. Why? Because you know that it will start attracting buyers again. That's why involve stocks that have declined. Take them. Another word is that these buyers take control of the market from seller. At accumulation stage, you see buyers will be taking over from seller because they've sold down the market already. Buyers are accumulating at the accumulation stage. Then at markup stage, see, this is when stock is trending higher. As demand keeps rising, it keeps increasing, pushing prices up. This bullish phase may also see an investor buying on what? On dip. Any small dip, any small pullback in this markup stage, see investor taking advantage of that dip, that correction or pullback to take advantage. Just like what we are seeing now in the market. And what we are seeing now is a pullback. I've said a pullback that market that enter at what? At the distribution stage, it rated that 42,412. And when the market got there, it rated that point, the market started pulling back. That is correction. You as an investor, see that pullback like coming, it takes time for you to buy. Especially now that the pullback are reflecting on the yields of this company, it's becoming more attractive. You don't need to panic at all. Look at those yields. I'm speaking now. Most of the yields for the next 2 months is higher than the yield for you to get for what a whole year in trading. And it's not causing this form divert that come and moving from equity market to money market. Just because of 5.5%, for trading people, there people are moving away. But I'm telling you, some stock as speaker are giving you 11 points as it's the minimum that I see so far that result is about 6.7. The minimum result that come to the market, and that is what from Alpha Potential. Others are above 8.5%. How is good for you? It depends on your investment objective. If you are income investor, you don't need to be panicking because market. How you take your dividend when they pull back, can now buy back at a lower price because that is what you survive. Traders like us can be selling off, but if you don't buy a good stock, those that talk like the Zenith Bank and you are a dividend or pensioner or dividend income investor or pensioner, you don't need to sell off your stock in Zenith Bank. Why? Because you know that by the end of second quarter, you still have another dividend. Why you sell it? And as you speak now, the stock gives you 2.70 people and you tell them below 60 naira, you have more than 10%. You don't need to panic at all. Just take your time and know why you're in the market. Don't follow the target strategy. Everybody has different investment group. And who's different investment group? So that a trader is different from an investor. If you know why you're in the market, that kind of talk you should be. Then at the markup stage, I said these real prices are going up and investors are happy. And the people are going up, attract more funds to the market. At that stage, you want to take position. That markup stage is very good for every investor. Personally, when I've accumulated the stock, my team moving up, I was smiling. That's what are coming front and then you find a level, that is that level at the different stage, then don't place, start selling. Don't be greedy. Once you have reached your target, start selling. But people, they want until they make 100%. The error of making 100% in the market is slim. And those that win 100% is those that know how to position early. I believe those that are putting us the best data and that are also in this platform today. When we said you should buy stock in the beginning March and April, we give some stock. Those stocks are going to give investors for typically more than 80 and 100%. The same year that market gain for 50%. If you make 100%, then you enter early. The more that you buy in December or in June, in September, come back, sell it, and go back to September or October. The more that enter in April, that's not the same. But you enter at a lower price. So it is that this year too, as the year is starting, you need to know when to buy stock that have fundamental, so that you know that there's potential to that at the end of the year, this stock will hit so price. And that is why
Listen. Yes, Ekpele. How are you? I saw your message there. Send to me.
All of us that we share knowledge and insight how to pick stocks, at different stages. And that's why to come up with these spaces because market is not be shaking or afraid that market is pulling back. It's part of the market. Market will always correct. And that is for the market. Then at the junior stage, it's when market runs out of gas. When you run out of gas, when you are if you are those that drink gas for morning exercise, when you have done exercise, there's things that you'll be panting. So there's market that is like when market gets a level, market will be looking for bread. On that stage, that this market is a bit, that's why I call it resistance level. And that is they will start off exiting your position. You might start to sell 50% of your position and watch. Then you start to don't just say because market is doing I'm not the market. No. If you go to market, that's the market will bring you down. Then you have your strategy, and that will go a long way to help you. At this stage, sellers are taking control of the market from the buyer. And that is not it. So they are taking over the market. That's why that will say down. But at different stage, stock begin to trend lower. At this the price of stock start looking now, rallying down. I'm telling you, people go into another time sell off, here and there. Other weakness also in the market because of what liquidity is giving the market. We call it fund leaving the market. But when a fund is entering the market, you notice that at that market stage, funds are entering the market seriously because they are chasing what undervalued stock. That's why at acquisition stage, you need to know when they're like now market is at this we should not see that speed because it pull back, it's going to decline. Then when market are really lost more than 10%, see the same pullback, or when market are lost 20% after a year, that's the market was in a very cycle. And that is how we look at this property. Look at also the economic activity and the two cycle of the market, bearish and bullish. So have it at the back of your mind. You know the right time to be in this stock. You don't need to work to panic. That said, when you see that interest rate is low, which sector that you're going to impact is most sector that I go industrial or those consumer goods, they know even the transport is why? Because they have access to transport. Then you now need to what happening in the economy now. What are we now? And also the results that come and take are give us insight that these companies are going better. Even when we experience the world, it's true that because of coronavirus, even we have about 2 months up to 2020, company results are still more than expected, beating expectation. For me, it gives an insight that there's no panic at all because our hotel companies in the Nigeria market are the non-traditional good numbers that will support their price. Now that it's going back, it's important for you to buy, and if you are dividend, investor. Take advantage of those stocks that are going back, they are dividend that have gone up. For after application, you need to use for technical analysis, and that is not the class for today. Technical analysis say you want to jump into a trader. You look at your moving averages. Like I tell you that you see to investor, they use 50 moving average to know where to buy and what to sell. They know that once market cross down 50 moving average, they are selling off. When they break out moving average, they are jumping to the market. These are the things that we'll discuss in another class more. That is purely technical angle of the market. But don't look at the fundamental, looking at the earnings and the economy because you can't separate fundamental from technical analysis when you are investing. You must combine the two. So you must know one first. That's why we're starting with economic cycle, then go to the market cycle and the market faces. That market faces is a trend that will also guide you at any time you are taking your investment decision. Then for me, at this time now we're seeing earnings. I said we're already entering at the middle of the earnings because March is the peak of the earnings in the Nigeria market because many of the companies have by year end are more than 50% and the middle results and some will come with reward. And that will change the face of the market. That's why the market is oscillating now. Yes, the market was up this morning, market is only a bit down, but I'm not afraid because when earnings start hitting the market, it will change the face of the market. So after the anything that will not say yes, this is where we are going. But as far as the market has not gone below 20%, I think the market is still a good one. Also invest in good companies. Don't just follow bandwagon and invest in something that there's no fundamental. Company has what to offer. That's why as an investor, look at what is the business model behind any company number. Don't just buy because the numbers are good. Look at the business model. Is it sustainable? That business model is very, very key. It's very, very key. That's why look at your stock like Waco, you know why you're buying to Waco. You're buying to Zima, know why you're buying to Zima. But if you want to buy into Champ, know why you're buying Champ. These are local stocks. They know what they are doing. The insurance company that does big capitalization, those that are selling their pension arm. Are they going to will I go and invest in such company? What will put their earnings? You have to look at all this. That will go a long way also to guide us when we are taking advantage of the market. On that note, yes, I expect you to ask questions from here. If you have any other thing to add.
All right, Mr. Ambrose, thanks for the session. It's quite insightful and educative. There's no doubt that our listeners will be able to really understand what they need to get concerning the market situation right now. And now that the first quarter is almost running, we're going to second quarter. I think our listeners, they have questions and they have a lot of things they need to understand concerning the presentation of the seminar. I want us to ask questions in any area that we think is not really clear. Is it concerning the base microeconomics on the market, or the sentiment behind the bull and the bear market? What about the factor that supports markets in Q2 and beyond, or how to cut loss and position for the profits of Q2 and beyond? So it's over to the listeners. Please, you can ask your questions. We have Oluremi Ayeni raising up her hands. Mike,
yes.
Go ahead, unmute your mic and ask your question.
Okay, good afternoon. I've done that. Mr. Lawyer, I want to appreciate the program. And I asked a question on the chat box just a while ago for Mr. Ambrose. Apart from the consumer sector, the consumer goods sector, which other one can we now say is approaching markup stage? That's number one. Number two issue, which I think would help us in this particular program today, is if we have idea, because it's good that you clarify that not everyone should be eager to sell. I'm a pensioner, I'm a retiree, about to be pensioner, as it were. So why are you laughing? Really, the question I want to ask is, it's helpful to know those companies that have their year end for December, and maybe a few others that do not have, so that we know when the price movements happen. Because, for example, Zenith has proposed dividend for, is it 20, whatever date, I can't really remember. What are the expectations so that we can carry people along? After the dividend is paid, what's likely going to happen for price, so that we can know whether we wait until that time to take position for long-term investors. Thank you very much. And well, maybe for purpose of presentation, if you are on Zoom with us, we'll probably hear you better, because the audio was a bit of a strain. Thank you.
Oh, okay. Sorry about that.
I'll start with another industry that will explain the markup. I'll tell you that markup when you look in the transport sector or service sector, the airline, we expect a markup in that sector because of the breakthrough in the vaccine. The activities will come back to that sector again. And another sector that we know will expect a markup again is the financial sector. That I told you, just because of this increment in JGB, the banks have been struggling before now with their net interest income. But this increment will pass on their margin. At the same time, most of them are trying to go into a holding company for the bank, so that they can get other sorts of funds or income to support their bottom line, which is good for the financial sector. And don't also forget that with the economy coming out of recession, we expect that going forward, the non-performing loans of the bank will start coming out. Because when the economy is out of recession, who can service their loan? No, because now, last MPC meeting, CBN said most of the treasury will move above 6 point something. Before the treasury for regulation is just 5%. Tell you that because of the bad economy, the banks also are hit because of people are not paying back because of the economy. But now we're out of recession. I see a markup stage for the food and beverages, for the transport sector, especially the airline and heat related. For healthcare have been on the uptrend, and it's good to sustain that move because government is investing in it, and the discovery of the vaccine also will impact direct on the healthcare. For me, there's no cost to allow for the market just take time. Then as you just ask for pensioner, what you do, you have investment goal. it was better to guide you as a pensioner to target those companies that have fundamental that you know they can grow their dividends. They can pay you good dividends from their earnings. And you don't give what you don't have. When a company is doing well, you are sure of what getting dividends. But when a company is posting loss, you don't expect them to pay you dividends. And for the case of Zenith Bank has just declared 2 naira table takeover. And for me, if you are there as a pensioner, even as a long-term investor, you hold your position. Why hold your position? Just because, one, it's a financial sector that has come to stay, and at the same time, the company or the bank has constantly grown their performance, their earnings for the last 4 years. That means every quarter and yearly, Zenith Bank grows their performance, their profitability level. That means they continue to grow their payout. That's for Zenith Bank. And as a pensioner, I'm going to expect another dividend from Zenith Bank at the end of half year, because they pay 2 times in a year, every 6 months. They pay interim after the 6 month account, audited that will come around July, August this year, and before they pay for their last full year. Now the traffic for the 2017 is for the full year. Why they are paying interim before? That means for this year now, 2020, last year, sorry, 2020, Zenith Bank has paid you 3 naira dividend, which is good, and it's selling below 30 naira. That means that stock is still at a discount. Also, if you look at the Zenith Bank book per share, it's about 35 naira 59 kobo. That means the stock is still at a discount. That kind of stock, you don't jump out. Being in the financial sector, look at financial sector is the engine room of any economy. That's for that. Then for those companies that have different year end, for those that have year end, there are only few of them that have different year end. One of them, I'll start from Vitafoam. Vitafoam has September at year end. Nimet will have September at year end. Why do that has March at year end? Our Flower Mill, Resta, Honeywell, Guinness is June, Guinness has June. These are the ones that have the interest. Others is December. I mean, that's why for Nigeria anything in first quarter at the peak, we will have more confidence reporting what their number. Because most of the equity of has December at year end. That's why December year end anything is what is more recognized, and people play out of once liquidity come around that market for the world activities, and that's year end. Thank you very much, man.
Okay, is it louder now? Hello?
Yes.
Hello? Oh, please, can you hear us clearly now?
Yes.
Hello? Hello?
Hello, please, we can hear you clearly.
Yes, you are clear.
Hello, can you hear us? Hello?
Yes, we can.
Mr. Charles, can you hear properly now?
Yes, I can hear you properly.
Mr. Charles?
Yes, I can.
Yes,
hear you.
okay, I can. Okay, thank you. All right, let's go ahead. So do we have any other question? Mr. Charles, like you have a question, please go ahead.
Hello?
Or you can type in your question in the chat module. Please, I have a question on averaging. Okay, there's a question on averaging. That's from Umar Abdullahi.
Is it averaging down in price or averaging technical analysis?
Let's talk about averaging in price.
Averaging in
Averaging in price.
Okay. Averaging in price is where you enter the stock at a high price and then the price starts dropping and the fundamentals that attracted you or the things that attracted you are still intact. And you know that the stock can rebound easily. Then when it moves down lower to lower price, you can buy at that price so that when it touches the support level is very important. That support level, that's why I think is very key. That support level, like, it starts dancing at that price. That can be the analysis. Okay. Yeah. Okay, well, let me build one and play now. Then you can now buy at that price, you are bringing down your price. But most time, I don't encourage averaging down if you are in a bad stock, in a bad position. because don't put more money to sink in the bad deal. Let's make sure that the fundamental for that stock to bounce back easily in the shorter time and not a breakdown. But what attracted you that stock are not there again. It's not about breaking down, sell off at the cost loss. It's very important. Sell off to cost loss, not just say because it's going and let me buy more. You have to the debt, the asset. You need to have that capital that is there. That's for breaking down in terms of price. For breaking down average technical analysis, we have to more than 20 different moving average. We have some moving average like 7 days moving average, we have 10, we have 15, we have 20, we have 50, we have 100, we have 200. 200 is for long-term investor. Once it's not investor, I'll tell you they use more for 50 moving average. But this moving average that have 14, 20, and they will call crossover and moving average. I said that we can't do that in this class, but not in technical class. That crossover and moving average will tell you that once a crossover the price action, it's time for you to just jump in. Or when it goes down, it's time for you to sell off. Instead of that, you are taking just moving average alone. When it crosses from down, you jump to the top. But when it crosses from up, you sell off. But because we are not doing that now, I can't explain more than this. But I think we'll put another section for tech analysis. Then that you can look at it. We have different moving average. We have 7 days moving average, which is shortest moving average for traders. You know, they are good at doing 3-day trading. They are doing day trading, you use minutes moving average. Don't use the day moving average. That you want to know at the top performance. That's why they have different moving average depending on your time frame you want to use. We have daily moving average, we have 7 days, we have 10, we have 15, we have 20, we have 21, we have 50, we have 100, and we have 200, depending on your own investment strategy. For me, if you want to use all these together, you take like 10, 20, and 50. Then you look at them, when they cross each other, that's a very strong signal. And that's to do the stock or to sell it.
Okay, thank you, Mr. Andrew. Do we still have any other questions? If you want to ask questions, please unmute your mic or you type your questions. Okay, there's a question from Olurebia. It would be helpful if the few companies that have year-end different from December is provided on the WhatsApp platform. Okay, all right, noted. We'll make it available. Okay, but can you just tell us a few of those ones?
Yeah, I said earlier, for those that have
year is different from December.
Yeah, those that have March, I said Flower Mill, Nigeria, Moneywell, Red Star. These are the strong ones that have the March at their year end. Guinness have June. That's why I want to start from March first. Then one after the other. Those that have March is Flower Mill, Nigeria, Moneywell, Red Star. These are the March account. Then for April account, I have only one, which is QTs. QTs is one that has the April year end. Then the one that has May year end is TZ. TZ is only one that has May at year end. TZ, Nigeria, PLC. The one that has then, the one that has June. June is a Guinness. Guinness, Nigeria, the one that has June. That are active. Other ones that are not active, they are very diverse, but they are not active. But what you want is Guinness. Then the one that has September at year end, Vitafoam and the Nimet, that one that has the September. Others in the market are December at year end. All the banks are December. You know, like the time is going to be the banks will have a uniform year end and December. All the banks have the December at year end.
Okay. Do we still have any other question? There is somebody raising up his hand. Please, you can go ahead, unmute your mic and ask your question.
Okay, thank you for the program.
Good afternoon.
My name is Adeni. Good afternoon. Please, I want to ask, probably you might have said it in the program. I want to ask, is there, are you hearing me now? Hello?
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 Okay, speak on. Please go ahead.
Okay, yeah.
I can hear you now.
Is there a particular during the year that you decide, okay, to buy a stock, or is it a calculative form that maybe after the end of the end of the year or within, it is then it's good to buy? I want to know the technicality when to buy and when to sell.
Go back to enter and sell off. That's for trader. But if you are income investor, you are looking at numbers. Well, I don't tell you that it's only investors don't understand the market want to see the number of any company before you buy to that company. If you have interest in equity market, you must study companies who are at their early stage, first quarter, second quarter, are they making any ending up? Then you not target their end of first quarter, second quarter, third quarter, and that's why in investors have the call it mastering the earnings video. That video will teach you how to invest in any season. Any season, because you should know that any season is 4 times in a year. And if you want to make money within that cycle 4 times in a year, that means you need to be in that store before the results come to the market. But if you don't understand the market, you have seen one of the companies that, oh, the result will come so date in the slow period. Because for those that have December at the end of March, we expect the result to come in April. Because the rules in the market is that after 30 days of your quarterly end, you need to release your result to the market. Just like you send a child to school. The child has to come with your report card at the end of the term. And then for other companies, at the end of every quarter, they give us what they know. Investors don't know what happened in the company for that 3 months. That's why every quarter they release what or quarterly result. And for those that have December year end, at the end of March, you release their first quarter in April. And you as an investor or a trader, you know that it should be in the market before the result comes to the market. That's why if you have that material, market earnings, it will tell you how to invest for 4 times in a year. If you want to play only any season, don't want to win it, they want to buy before for earnings. That means you have to be in stock before the earnings come to the market. When it comes to the market that is positive, market react to it, you sell off and go out. But if you are the type to see the result, when you are coming, those are what can be selling to you because you are waiting to see the result. But if you have a trend that this company has done well, it's also good. Oh, because of what has happened now, you do better. You enter before the result comes to the market. That's the strategy. You don't wait to see the number. It's only those that don't understand the market want to see the number first. But if you enter and the result is bad, you cut off your loss immediately because nobody can control the market. I will tell you, no matter the period that makes the market, you can't control the market. If the result comes that is bad, sell off, cut off your loss and move to the next one. Don't wait because you have entered early and the result comes is bad. You are making loss. No, don't complain. Once you enter early and the result comes within meet expectation, it's because of your loss and move to another stock entirely. That is for trader. But for those that want to invest for dividend, as the year is going, look at the earnings trend of that company. Is it earnings that trending up that will support pay up at the end of the year? Remember, I said that companies are not giving what they don't have. If you are posting loss, you're not going to pay dividend. And if your earnings is declining, you're not going to go to Google your dividend payout. Or if your earnings is growing, you can grow your dividend payout. That means you are earning more. This is what you should have at the back of our mind as an investor. For let your investment will guide you at all times.
Yeah, thank you, Mr. Ambrose. I just want to add to the question that was asked last time. I mean, just to add to the response. Now, I think what is paramount is that you need to understand the fundamental of the organization you want to invest in. You don't just wake up one day and say, I want to buy into the stock. The expectation is that you have the knowledge of the organizations. And again, if you don't have the knowledge, probably you are a new investor. We have a robust research department in APT Security and Fund Limited. So we do stock pick or stock recommendation on what you can buy at a particular point in time. So if you need such information, contact APT. So we make it available unto you. We are able to drill down, based on sectors or based on companies. We analyze this and make it clear to our investors. So please feel free to contact us. We are open, or you can ask your question on the WhatsApp, or you can also ask the send email. So before the next question, so I say kindly throw more light on the factors that will support the market in second quarters and beyond. I say, what are your recommendations for the top stocks to buy at the moment? What?
I will look at the the factor that support the market in Q2 and beyond. For the stock to recommend, then they will leave it for perhaps they will recommend stock for it. But we'll do the factor that will support the market beyond Q2. As we speak now, we're already seeing the first factor that will guide the market in Q2 is one. I said earlier that this is the first time in the history of Nigeria that crude oil price is going up and it's not impacting our market. I mean, there's a divergence between our market and crude oil price. And I know between now and April, we're seeing that focus from the top oil traders saying that oil is trying to hit $100 this year. And they're saying before the end of Q2, we're seeing an oil hitting above $70. If that continues, I believe that because CBN or government is investing in other sectors to know where they are putting money, that's why the rally we're seeing oil price is not a reflection on our results. Once it's started already, it's going to change the sentiment for our market. And also, the number that we don't see that has come so far is also a clue that companies will do well this year. Especially now when they are worried out of recession according to the figure from Bureau of Statistics. Yeah, I know, but they were already in positive of 0.11, which is good. But I tell you, the vaccine discovery is a plus for not only Nigeria from a globally to support a lot of activities. Because fear of lockdown here and there will die in the world. You know the part of lockdown, what happened last year. I mean, for the lockdown this year is late, but the vaccine would have taken for that to support the economy, the recovery. Then the numbers we are seeing, as the companies are pulling back, numbers are becoming better and stronger. That is, market will start putting those numbers and the reversal. These are the second point. And also, regulation also like the CBN meeting for FPC meeting. It's another part of, like now we have another FPC meeting coming up in the last week of March. And you see what happened in the first FPC. They left the interest rate unchanged. And if CBN team decide to leave interest rate unchanged, that would be a plus for market recovery and economic recovery because that means we still have fun. Also, if they go further to adjust this 30B rate that is jumping now, depending on uptrend, those will be a support for the market. But I believe that the 30B will not be true for the market. Why? Because in 2017 and before now, market rally has gained almost 50% above when the interest rate is around 14%. That means at 5.5 for me, yes, it's a trend to capital market, but that will not be what will be the market remain down. Rather, if CBN adjusts down and things improve, I think market going up in the second half of the year, second quarter and beyond. These are the factors that will drive the market. And also see that the world not seeing the same trend. Look at the trend. When there's increase in fixed income, therefore the fixed income market, there's a slowdown in equity market. It's a cycle. As investors or readjusting their portfolio, I believe that before the end of this quarter, you see that they've done their portfolio rebalancing. They will not see a new trend in the second quarter and beyond.
All right, thank you. Okay, there is somebody raising up his hand. Ishola, please, you can unmute your mic and ask your question. Thank you. Mr. Ishola, we're waiting for you.
Hello.
Yeah, good afternoon.
Hello. Good afternoon, sir. Good afternoon.
Good afternoon, please go ahead.
All right. Please, I have a question. Before I ask my question, if you won't mind, I like to make certain preamble. I've been with APT for about 14, 15 years.
Wow.
And I have about maybe 11 or 12 companies where I have shares. The issue is, with due respect to you guys sitting there, if this business is not okay, you will not be there, of course. But how come that some of these companies I have shares in, their prices remain 50 kobo, 3-4 years. What is happening in most of these companies? Are they actually managing these companies well? Why should the price over the year remain? Some of them, except, Access Bank, Dangote, Cement, First Bank, other companies, I refuse to look at their prices because it doesn't make sense. If you look at after the what do you call it, worldwide financial crash of 2008 or thereabout, some of us have. Hello?
You are referring to the Met dance period.
Yes, the Met dance period. Now, from there to this time, some of us who had shares before the meltdown, we've lost millions. And when you talk, we are even afraid of this. Well, I used to call it speculation, whether to be buying and selling or whatever. So what is there actually, is this industry actually worthwhile? That is my first question. Does it worthwhile? You buy shares, you are losing money over years. Thank you.
All right, go on.
Yes, this question is what has kept many investors at the fence, not to come back to the market. Forgetting that the market where you lost money is where you can make back your money. It's only that you need to change your strategy. Like I always tell people that if an adult is running and it falls, that's what turn about look at what is on the ground that falls that adult. If a child is running and that child falls, you continue. If you have made investments 11 years ago and those companies are still down, it means that you are in the wrong stock. All you don't need to do is change your strategy. I don't know them, but you have to change your strategy. If a stock can remain flat for 11 years, the price didn't go up, that stock should be disposed from your portfolio. In that kind of job, I break down. What they are breaking down, send up that portfolio and move to other thing. Yeah, that's how it should be. We don't like what I do that. We don't marry stock. Like what you just say, you can be speculating, but we are doing long term. Like what I encourage people that follow us in the best data, that you should have two portfolios, one for long term, one for trading. But that the one for trading that you can buy today, sell in 3 days before they go for your portfolio for long term. Company that has a good prospect, that you know that they are going to become bigger to go. Start accumulating them, like a pensioner, and know that they're going to pay you dividend. And you start going and they pay you dividend gradually. You have to go with the company. But those that you have entered for 11 years, the price is still flat for going down. I would advise you to dispose them and put the money in those that have the future.
Mr. Ashula, I don't know whether you get an answer or that address your
Thank
question.
you very much.
Thank you, sir.
Very good. Thank you.
One thing I want to just add to that is that I think, so like Riley said, that before you go into any investment, let's get analyst, expert advice. Okay, for instance, for a retiree or a pensioner. So, and the kind of stock you buy will be, there are people that invest long time, and there are people that are day trader. So it is the strategy you are going to change. There was a time somebody mentioned that I think he bought Zenith Bank at 26 naira then, and those Zenith Bank stock, price came down to as low as 17 naira. So if you have sold at that 26 naira, okay, and you hold your fund, and when it came down to 17, you buy again, you are making profit. What you need to change is the strategies. I think there are people that are stock buy for a long time, and there are also some you buy for trading. So the kind of stock you buy for a long time would be the one that will really give you good dividend. And we said that if you want to go into such, we also advise you on the kind of stock you can buy, which will give you a dividend whether quarterly or yearly. So, and that is that. So we can discuss after the seminar and see how we can go about your concern. Thank you.
Sorry, just to add to what you don't say now, run it up. I mentioned it. We investors, our goal is very important. As an investor, you have money. You can have your long-term portfolio and your short-term in the same market. You know why? You can take advantage of opportunities, buy low and sell. But you can't be playing the same stock for long-term and for short-term. They are so that you want to buy and keep them to go with it because they have fundamental. Not like what I said earlier. Remember, if you are in this class, that those that enter position in the period of March, April last year, and those that bought in October, they can't make the same return. If you're long-term investor, you take advantage of pullbacks or low price to enter and move. For the traders can buy stock today at 5 naira at 550, 600, they're selling off. They move to another stock again. Those ones are traders. That's why I have to portfolio, not just say because we long-term investor, to buy stock for 2 naira, it goes as high as 50 naira being said because we long-term investor. No, we must understand what is happening in the market. And that's why I like people that are smart, that they always call us investors and what to do and what not to do. Because okay, you don't just put your money in this market because stocks are not like wife for marriage. No, stock is where you make money to move. Don't give stock when you want to show the son, I have First Bank, I have this one. No, you have to make money with stock. It's not the name of the company, it's the potential to make money. That's for what you are interested in. Thank you, sir.
Okay. Do we still have any more questions? Hello, do we still have more questions? Or you can type your question or your concern on the chat bar. Hello? Mr. Ambrose.
Yes.
I have a question for you.
Yeah, go ahead.
And I want to believe that our listeners will also benefit from the questions and from the response you give to it. Now, from time immemorial, we observe that this first quarter of the year, we have a lot of stock price going up, the rally. You know, it's usually a bullish market because there is expectation that the December year, a lot of companies will come out with good results, and the position for it. For instance, look at UCAP. They did well, even better than what they gave out last year with 70 kobo dividend. The same thing with Zenith, 2 naira 70 kobo. But rather than for the price to move up, it's going down. So, what is your advice on that?
No, there's always I tell investor that market sentiment differs. That's why it's among the capsule that sentiment and liquidity is key in the equity market. When there's liquidity in the market and sentiment is positive, price will rally. Or as you just said, see where the market is coming from in 2020. Most of these prices you are seeing have been factored into the prices of these stocks before now. Those in the touch as high as 28, 29, around December, January this year, price move up. But people are factoring these results were expected in that kind of price. As it's coming now, those that are dividend investors, I see that these company numbers are good. They take their dividend. Those who are putting price are traders. They are looking at this price to come down again. But you as a long-term investor, if you have made more into the dividend, you take, and if the company fundamental is that, you don't need to panic up because market did not respond to price to their dividend. It's just because the market is also divided. I've said that because of the change in TV, funds are moving to money market gradually. Before equity market was enjoying full flow from money market to the market because of low rate in TV. Now that TV is going up again, people are looking at the way of TV for safety. But I tell you, to take this equity market to make money, there's no cost for alarm. Those that the company have not done well, they have done well just because sentiment and liquidity in the market has changed. I call the trading pattern has changed in the market. And you as an investor also go with that pattern. That's how I mentioned the 4 phases of the market: accumulation stage, markup, distribution, award, and decline. At this frequently, you apply different strategy. Yes, markup, I say markup, price move from nowhere. It's going to move from as low as 10 naira, 70 kobo to 29 naira to the 8. People will say, now that is right for me. Don't need to panic because we don't see the bank going even below 29 again. Why? Because there's no pandemic again, because the breakthrough in percent are going to show the economy. There will no lockdown again for talk to start crashing. Even the vaccine is going to also support oil price. And China also increasing their consumption because of opening up the economy wide, also going to support oil price. For me, there's no cause for alarm. Our market is just in order. If pullback is expected, take advantage of it because these companies are becoming stronger. UCAP, we don't mention. UCAP for me is a good one because the way they are branching out of Nigeria, to other neighboring countries and outside Africa, it doesn't mean that they are becoming bigger. That means if you are in UCAP, we see the price coming down as low as 4 naira or 450 to buy more, because without expansion, when that this company going to increase their share capital is hard. I might come and go bonus anytime. For me, they thought that a long time, because the people that ask for stock to recommend, I'm not even started to tell you stock to recommend. UCAP with other stock can look the way of UCAP. Yeah. Student bank is also a stock that can look the way of student bank. For me, it's not important. That is my income investor.
Yeah, it's like we are mentioning the banking stock, the financial based companies. What about people that are not banking? So which are
people are not banking? Yeah, we can look, because I tell you, if you remember what happened in the last quarter of 2020 when the price of cement were up. You know why? Because the demand, people were doing the rotation of was activities was in that real estate business. People are trying to go into what small, all those affordable, housing and estate here and there. For that, government coming to develop housing here and there. See, there was demand for cement, and that's going to continue. For me, if you are not in stock like WAPCO, now that it's pulled back to this level, that's a position. This guy to invest. If you're a long-term investor that you are thinking that you can take this, another stock that you can look at after all their front and back is, I know that trust issues, trust is very important. It's not like the oil sector that has potential to expand. The way sector is going to make money, that is the way we want to make money. But because there's no trust and confidence, people are not going to work for Wado. Seplat today has Guto gas, Daito gas. Why Wado has more than started entering gas before now? No, I tell you, Wado has a lot of access to turn into money because the public have confidence and trust. That is why they are pricing too. But if you want to take risk and you're a long-term investor, you are not expecting dividend. That kind of stuff we look at. But I know what is happening between SEC and Wando. Any moment they settle that, there will be practically Wando.
All right, thank you very much, Mr. Ambrose.
Thank you.
We still have any other questions before we call it a day? We have more questions? Okay, I want to make it known that our next seminar will be how to trade remotely. For those of us that have not been able to trade on our own, whereby you can quickly take position. We have a platform, we have the mobile app, we have web app, where you can trade yourself without depending on anyone. It's very user-friendly and it's easy to use. So the next session, we're looking at next week, Thursday, to be able to take our trader or investor through the platform so that on your own you'll be able to trade. So we'll send out email and we'll let you know. I mean, it's going to be 12 noon also because we want it to be during the trading hours because the trading hours starts by 10 a.m. and it ends by 2:30 p.m. So we want the trading to be within that period so that you can see how to trade, remotely. Your location is now the trading floor. You can trade in your office, you can trade at home. I have a lot of pensioners or retirees that what they do on daily basis is to check the platform, see the way the market movement. As also an investor or a trader, you need to be up to date about the market. You must be conversant with what your portfolio, the performance of your portfolio. Gone are the days whereby you buy stock and you go and sleep. So this day you don't need to, on daily basis, you need to check your portfolio, see how it's performing. Our platform give you, there you can have your stock summary performance. So there you see whether you are making money or you are losing. And that you can quickly just take decision. So by next Thursday, we have another session. It's going to be 100%. Okay, yeah, we're taking notes of that. Okay, there's a question here. How do you ensure you get all your dividend? Okay, I think what is also from Mr. Salisu of the line. Yeah, concerning dividend. Now, for every stock you buy, please, it is very important. There's what we call share transfer form Okay, the share transfer form has to be signed. And once you sign it, you can send it to us at APT, then it will be dispatched or be forwarded to CSCS. And not only that, your e-dividend mandate form is also very important. So for you to be able to get your dividend, your e-dividend mandate out to be filled with your BVN and bank detail. So you can send that to submit it at your bank. And when you get to your bank, you can get 2 copies of the form. Okay, let them acknowledge one while you submit one. And what they do is to upload it to the registrar. Okay, so bank helps to upload your e-dividend mandate. But for the share transfer form, if that is not submitted first, your e-dividend mandate form will not be treated because the share transfer mandate form contains your signature. And that is why some will say, oh, we can't see your signature on our system. That is, most of those registers will mention that. They say contact your stockbroker. So when you buy any stock at the secondary market, please ensure you sign the share transfer form. It's very important. You can contact your account officer or you check our website. We have a lot of various forms on the website that will allow you to do that. And if you are not really cumbersome with those things, you can call on at APT or Lagos office or visit any of our branches. We have branches in Gombe, we have in Kaduna, we have in Kano, we have in Sokoto, we have in Jos, we have in Abuja, and also we have in Lagos. So please visit any of our office. Then the people there, they will guide you on how to go about it. And also, if you are also very good at using email, you can send your correspondence to info@aptsecurity.com. Or then we'll also have a customer service that we attend to your request. Thank you. If there's anything you want to also find out after this seminar, you can call us or you send email to info@aptsecurity.com and all your requests will be attended to. Thank you very much for your time. Without wasting much of our time, since there is no other question, or it is time for a vote of thanks, I want to appreciate every one of us who are able to make it this time around to attend the seminar. And there is no doubt that this seminar has added value to you as an investor. We also want to appreciate our expert, Mr. Ambrose, for time to come around for this wonderful presentation. We appreciate you. And we also believe that anytime we call upon you for something like this, in future you will be available to do justice to the seminar. Thank you. Sorry, a quick question for you. Okay, there's a question from Amina Jaji. Okay, please, your question. All right. Thank you. The session by Mr. Ambrose was insightful and interesting. Thank you. Okay, from Amina Jaji, please your question. Please unmute your mic and ask your question. Okay, so please, what is this, your trigger stock? I am seeing on the website. Oh, okay. The trigger stock is like an alert, something that will alert you. You know, for instance, if you bought a stock, say for instance, UCAP, you bought it at 6 naira, and you're now saying, oh, once the price gets to like 6.10, that it should alert you, should send a trigger to you. So an email will be sent to your email box that, oh, the price has reached the target price. Because when you have an entry price, you must also have an exit price. So the trigger it helps you to be able to set a target price for your stock. Okay, and that's another plus because it's a way to monitor your stock performance. You might not even know that, oh, it has reached that price, but the trigger will send a notification to your email, and from there you're able to do whatever you want to do, or probably you get out of the stock, or you want to sell, or you want to, but it will help you to take the decision.
No problem. Raphael, before you close, she raised one question again.
Okay.
She said that what if she do not respond to the email? The essence of responding to the email is just to highlight you that you have set an alert and now they call your attention, it has reached that point. The trigger on doesn't make you sell or not sell. It's just telling you if it is a lower price, probably you are saying that if it come at this low price, let me know so that I can make up my mind either to buy more or do something. If it is higher price, what it means that it is just telling you that it has reached that price. Now the choice is up to you. If you want to sell, you can now decide to sell. Or if you want to now set another target, you can reset another target. Because the market do what it's going to do irrespective of your response to it. For instance, look at Lafarge WAPCO. It started from 9 naira. It went 13 naira plus. It come down to 11 naira. It went 15, 16 naira. It come down to 14 naira. It went 18 naira. It come down to 15 naira. It went 25 naira. It came down to 22. It went 31 naira. It came down to 26 before it moved on. Then it came to 23. Now it's trading below that. So the essence of all this is to tell you, make up your mind. But generally, the participant, I want to call your attention. We have got a new trend that I want all the investors to be aware. If you look at 2019, 2020, and 2021, we have come to realize, irrespective of what the position of the market as of December, still go up by January. If you remember last year, the market gained 50% as of December. Notwithstanding, the market went up in January. But look at all what the market gained in January to wipe it up in February. The same trend happened last year. Whatever the gain made in 2020 in January, it was wiped up in February. The same thing happened in 2019. The market gained more than 17% in January. By the end of February, it wiped it up. So I want you to understand that January now become a trigger that the price goes up. And my advice to the investors, learn your lesson and take position. When the market goes up, sell, hold your money. You watch the market come down, irrespective of their results, the market come down. And this is the market for you. Because it's a time, it's not the performance. I couldn't believe it, and I couldn't explain it to most of the investors. By the time UCAP declare their result, move their dividend from 50 kobo to 70 kobo. That same day, the market lost 60 kobo. UCAP was trading at 6 naira 60 kobo. It closed at 60. Today, despite their good performance, the price does not go back to 660. And that is the market for you. So the market is going to do what it's going to do. And if you decided to argue with the market, you will only become a mediocre. So try not to argue with the market, understand the market and do the needfuls. When you need to take your profit, take your profit. When you have set your target and the price reaches there, please take your profit. Play your part and live for the rest. Don't ever overstay. When you overstay, the market is going to do what it's going to do. Today, I have seen people who want to even to sell WAPCO at 26. Despite the fact that WAPCO was at 31, 30 naira for over 2 weeks. Yet they did not make a decision. And now, instead of this, it's now trading as less than that. And WAPCO is yet to declare their result. We hope that they will do well. But the way the market is even where you do well, there is no guarantee. Because, yes, there is no guarantee that the price will go to where it want to. You expected it to go there. So please take note of that. and thank you for attendance.
Thank you, sir.
Thank you, sir. Thank you. All right, thank you, everyone. We appreciate your coming. So, we'd like to also tell you that by Thursday next week, then the session for the 100% practical training on how to use our platform. We're going to do a training on that. So thank you for your time. And like I said, if you still have any other questions, please endeavor to send it to our email address, info@aptsecurity.com. Thank you. Okay, there's a question. Network was, will you be sharing the video recording? Oh, okay. We'll send a video recording to everyone, to all participants. Send a video recording.
Rappel, they were asking in the chat, and they were asking for the WhatsApp number, so you can give them the WhatsApp number. Yes, please put it in the chat. So put it in the chat so that they can pick it from there. But please advise them that it's strictly on investment. We don't want to hear all these sort of stories. We strictly adhere to the investment. Anything related to the investment, so it be. So thank you. Thank you.
Thank you, everyone. You have a wonderful day. Thank you. Thank you. Thank you for your time. Thank you, Mr. Thank you. Can we take a photograph? Please on your video. Put on your video. Please put on your video. Put on your video. I want to take a snapshot. Please put on your video a group photograph. Okay. Please let's put on our video. Yeah, Madam Adele Dayo. All right. Madam, good to see you. Yeah. Okay. Please, let's put on our video. Want to take a good photograph. Let's put our video. Mr. Charles, Usher John. Okay, Salisu Abdullah, you can see you. Johanna Gomna. All right, thank you. Mr. Umar Abdullah, we've not seen you. Please put on your video. Samira, you are there. Okay. Allow a shade to call Umar Abdullah. All right, so I'm going to take a good photograph. All right. Thank you.